Hello and welcome to today's Dalal Street Week Ahead video. Now in today's video we'll be taking a look at 4 stocks and the news which will be affecting our markets this week. Now the 4 stocks I'm taking a look at is Reliance Industries, Tech Mahindra, Asian Paints and Bajaj Finance. All have been covered on the YouTube channel before, but now I'll be sharing what option traders can do with it in January series and what equity investors can do with the stocks too. Now on the news front, the real positive news this weekend is that the US House has averted a shutdown as they signed a stopgap funding bill which has sort of postponed the issue to another date. So that has put off a lot of pressure from the markets, I believe, and it will be something to watch. Then the only negative global Q I see right now is regarding the China-Taiwan US issue. This says US has said they're going to be selling $580 million of military hardware and tech to the Taiwanese government, and China has got really pissed off about it and given them a harsh warning basically that they're now sort of putting the last nail in the coffin. So that's the only negative Q, but I think that is something the markets are adjusted to as that continues going on. They keep on threatening each other but never actually escalates beyond that. Now on the local front, the only thing is about GST, but I would say the GST press conference and the whole thing has come more like a circus act. This year most of the time was spent discussing caramelized popcorn, salted popcorn, rather than issues which are going to affect. For example, they deferred the issue of health insurance, which, as the group of ministers said, they require more time to finalize inputs from insurance regulators to consider reduction in the GST on the premiums. However, this is ironic because the insurance regulators have been going around singing openly to the government that this is a huge issue and needs to be solved immediately, but they deferred it. So I would say this GST council meeting was a circus act. Nothing was really done. In fact, things were worsened rather than aided. But that I don't think is going to affect us. It has come a bit of an accepted standard from these guys. Now that's it on the news front. Now let's take a look at the 4 stocks, of which I'll start with Reliance. Now, if you go back to the previous Reliance videos, I had given 2 downside targets. As I had said the 1340 resistance is going to be an issue. I had covered Reliance twice. Once I had covered it when it was here, then once I covered it when it was here. Here again I had said if it breaks, it will be falling straight down to 1220. So from the whole fall, anyone who will be watching YouTube videos will have sort of understood it and tracked it and even traded with it depending on their risk analysis and everything. Now Reliance has reached a major support zone as it hit the 1220 support and stalled at 1205. Now according to me, how I look at Reliance now, as long as Reliance stays between 1180 and 1200, things are good. If it breaks this, then it's going for a spin. On the other hand, if it manages to stop here at this point roughly, then it will form a base for a dead cat bounce to 1260. If it breaks 1260, then 1320. However, I would like to again reiterate that if this support breaks, things are going to get much nastier for the stock. But if it holds, then there's a dead cat bounce, not a long-term bounce. So it's something that I think people should more exploit via options rather than equities, because for an equity trader, you're not going to get much of a range if it only goes to 1260 and dies out. Okay, if it goes to 1320, very good. But first it has to deal with this. And right now, I don't think the risk reward is suitable for you to go into equities. For example, I personally on Friday near close entered option sales for Reliance of January series or basically 1200 and below based on the same logic. Naturally, they're not in a profit because I entered them at close, so they're at cost still. And as long as this support holds, I plan to hold them as they will inch into profit as this support holds in the coming days. If it breaks, then naturally I'll get stopped out and I'll walk away with a small injury because of the stop loss. If it works out as I plan, it'll be a good profit, better than an equity trade can provide you in Reliance right now. Next, we'll take a look at Asian Paints. Now, Asian Paints is another stock which I had discussed, and I had said when I discussed it, I had said that it is at a point at which you can go either way, but a high likelihood is looking that if it breaks the support, then it's going to be going down fast to the support at 2280. That is what has happened, as it has managed to fall to 2280. and held there, as we can see from the chart. Anyone who wants to verify can go back to the videos of the past and check it. Now, what do I see Asian Paints doing? Now, according to me, Asian Paints is still in the middle of things. It's again in a similar situation as last time when I said if it breaks the support, it's going to be in trouble. But so now, according to me, as long as Asian Paints trades between 2330 and 2250, it will form a small box range that will tie out both people. If it breaks 2250, then it's going to have a quick fall to 2120. On the other hand, if it breaks 2330, it's going to have a quick rise to 2430. If it breaks that, then 2535 and 2580. Now, Asian Paints, I am not holding anything, and I will only decide to do Asian Paints a trade via options or equity once I see which side of this range is taking. This is right now, it is simply too risky to enter option sells or an equity buy, because it can just end up going here for God knows how long. Okay, but that would help option sells, most will say, but no, the issue is the day it breaks one of these sides, it's going to break it in a big fashion, and if you're on the wrong side, you don't want to be caught in that trade. So that is why I'm avoiding Asian Paints as of now. But if it breaks 2330 on the upside, then I'll go long via equity and option sells, most likely both. If it breaks 2250 on the downside, then I'll go short, probably only via option sells, as I wouldn't want to do future buys in it. As to short, you can only use that. So that is my trading plan for Asian Paints. Now we'll move on to Bajaj Finance. Now, the last time I covered Bajaj Finance, it was roughly at this point, and I had said there's a high likelihood, due to the high volume bar which had formed here, and then another high volume bar here, which showed there's a lot of resistance in this zone. And this was volume resistance. It wasn't simple resistance that you can just say, okay, it should be able to break it easily. So due to that, I said there's a high likelihood of us falling to the support at 6800 to 6850. Now we can see that exactly happened. As on Friday, it closed at 6848, smack dab in the support range which I had given. Now, how do I look at Bajaj Finance for the future? Now, Bajaj Finance for the future, as long as it stays above the support range between now 6750 and 6800, things are okay. But if it breaks this, then it'll be having a quick fall to 6500. However, if it holds this, then you can have a dead cat bounce to 7150 and 7380. Now, do I hold any position in it? No, I don't hold any position in Bajaj Finance, and I don't think I'll open it unless I see some clarity coming in this zone via the volume indicator and the trend catcher and the volume bar. This stock is one I will want a 3-point confirmation, because simply of how erratic it's been in the past. This fall was caught because of the high volume bars. So if we got a confirmation from high volume, we got a confirmation from the trend catches, we got a confirmation from the volume indicator. So all that gave a confirmation, that's why it worked. But I think again it needs that sort of confirmation for you to be able to execute another fresh trade in Bajaj. Until then, avoid it, as the higher likelihood of you making a loss. This is not something you should be trying to play around in positional until you know what you're doing, according to me. Equity, it's not yet the time. Let it form also base here, then you can consider an equity buy in the stock. Next, we'll take a look at Tech Mahindra. Now, Tech M, basically, the last time I covered it on, I think I did a short on it rather than a long video, and I'm not sure which one I did, but I had shown that there is a strong resistance at 1805 and a high likelihood it will not be able to cross that. And I had said I have CE cells in it, as I thought that basically it's going to end up going and stalling at this point. I was correct, as it did stall, and in fact on Friday it had a very good big fall. Now, when I said it to stall, I had given a support of 1700 as a downside target. It has managed to reach that and go a bit below it, as it closed on Friday at 1686. Now, what do I see ahead for Tech Mahindra? Now, due to this bar which has formed, it's a high volume bar, and the people watching my videos know its significance. Now, as long as you're within the trade range of this bar, this is a stock that will be only for option sellers. Literally, option sellers can go and sell the bottom of this bar, puts below that, and calls if they're very aggressive above this bar, or calls again above 1805, and it should continue hovering. The only time when it will fall significantly if it breaks the low of this bar. If it breaks the low of this bar, then we'll be going down to 1640, which will most likely not be able to hold the pressure, and will go down towards 1560 and 1530. So now what is my trading plan for TechM? TechM, I hold the CE cells and I'll be basically cashing them out tomorrow. So will I enter new C cells or P cells? Now I will basically let this stock develop for 1 to 2 more trading sessions, and then when it gives a clearer picture, then enters most likely P cells of 1640 and below, and C cells of 1800 and above. Why am I going a bit away from the range? Because of simply how dangerous this bar is. I want a bit more confirmation before I take the trade, but I believe this bar will cause sideways motion to form within its body, and if it breaks the low, then it's going to go down very fast. If it manages to hold the low, then it's going to break a lot of the equity traders who are thinking it's good. They're going to buy it here and sell it somewhere here. It will basically put it in sort of a medium term box range, is what I mean. So that's my trading plan for TechM and for the other stocks. If you liked the video, then hit that like button and subscribe to the channel. And any questions, drop them in the comment section below and I'll get back to you on them. And if there's a stock you want to analyze, do drop it, and if it's got something interesting, it will be covered in one of the YouTube videos ahead. Thank you.